Hi folks, Scott here, and this is the wrap for Wednesday, August 21st. Very interesting day of the release of the FOMC minutes, Fed minutes from the last Fed announcement. And their two-day meeting, and I honestly haven't heard a word of what was said, had the news on anything. I've been doing research today, but clearly it added some volatility to the markets, which was nice. And I was actually able to take advantage of it with very little effort. And I'll get to that in just a moment. Not to brag, but just to sort of share some concepts that will help you. But first, let's talk about what tomorrow may bring us. Now, I'm doing this wrap a little bit early because I have a webinar this afternoon, so I'm not sure where we're going to close. And my assumption of what I'm about to show you may not hold true. So keep that in mind. Right now, we almost have a wide range day, but we don't. Or an outside day. Today's high is not beyond yesterday's highs. But we do have definitively at least a 20-day low print. It's actually about a 30-day low print, a little bit more. So this low price here is lower than the lowest low of the past 20 days. I'm anticipating that odds favor closing higher than 2 days ago, which was the lowest close of the past 20 days. So I'm going to show you the results of fading gaps following a 20-day low that was not a 20-day low close. By the way, I just got filled long on a little discretionary trade to the long side just to put my money where my mouth is. I'm long at 47.50. 3-point stop, and I've got an end of day exit. Hopefully we'll get back up near the highs. Let's see. And that's not a probability based trade, just taking advantage of the volatility. And see, we just came back near. It's not showing. We came back down here just above what the morning and midday highs were. Often what was resistance becomes potential support. So that was the trade concept here. Hopefully we'll get up here. Just a small discretionary trade. Man, I've gotten way off track. Sorry. It rung in my ears. It order filled. So let me show you the results. Fading gaps after a 20-day low that was not a 20-day low close. Again, if we close down below the close a couple days ago, this doesn't apply. So a couple things that stand out. This is a 50-50 directional trade, meaning 50% of the time historically it's gapped up, 50% of the time it's gapped down roughly. Using end of the day stop, not something I recommend, but a good place to start your analysis. 80% of those down gaps have filled because it'd be perceived as a bullish scenario where we put in a new low but we weren't able to close at a new low. That would inspire some bulls to step up. A gap up, surprisingly to me, a little bit surprisingly, is not as bearish or as weak as I thought it might be for shorting. Using an end of the day stop, it's just dead neutral. So I'll have to rerun these numbers for our members using our MTG stop parameters to confirm the tradability, if you will, without being stopped, of a down gap as well as an up gap tomorrow. But at least on the surface, it appears to be a neutral setup that indeed may be tradable. All right, let me show you what we had today. We end up with mid-sized gaps down. You see about a 4-point gap down, which ultimately did fill. I did not fade it, and that ended up being a great decision. Let me show you why, because I was very much on the fence. Those fence sitters don't normally pay over the long term. So markets gapped down in a number of zones, but most of them were between the close and the low of yesterday, which was just a neutral setup overall. I'm looking for 60 and 1.3 profitability wise, so pretty much in line. Met my criteria for win rate, but not profitability. No unique day factors. And let's see, in terms of unique patterns, after an inside day, which is what we had yesterday, and closing below the 10 and above the 200, a little bit weak, neutral to weak. So I did not trade today. Last night's wrap showed down gaps were just sort of neutral overall, using our MTG stop parameters after a bullish Harami, so not bad. But overall, the data was just a little bit too neutral across the board, no matter what. And the zones they were opening in a number of different mixed zones worksheet, and my other research this morning just showed sort of neutral overall setup. So neutral setup, mixed opening zones, few clear historical positives. I'll pass on faded days gaps. That doesn't mean there weren't any. There were some, but for every one I found that was strong, there were others that were comparably bad. So it all sort of vetted itself out. And my comment here is always, my decision does not mean these gaps are unlikely to fill. It just means there is no compelling profit expectancy to fade the open with our MTG stop parameters. That's all I'm trying to predict. Is this a good historical setup or not? Not whether it's going to fill or not. Those are two different animals. Let that sink in if that doesn't make sense. So no trade for me. ES opened at 1646.50. Bounced around. I did a discretionary long. The 15-minute range guys didn't show anything compelling, so I left them alone. I did another discretionary long, just like I did yesterday. After the fake out to the downside, I went long as we broke higher on a pullback just above the open, fully expecting I was going to make +4 on gap fill, and instead it rolled over and I lost 3 points. Now, as I explained in the trading room, if that happened, I wasn't going to be shocked, because I didn't fade the gap to begin with. So this was just a small discretionary trade. I knew it was too risky to have a real high expected win rate or high probability of success. So got stopped in a discretionary trade. 15-minute range correction. First 15-minute range guides showed nothing. First hour range guides were pretty good in both directions on the breakouts. I say pretty good. About half the indices favored, the other half were neutral. Low breakout was favored in the ES, favored in the YM. Look for 55 and 1.1 on range guides. Neutral, but leaning towards the low breakout NASDAQ and Russell neutral. Looking at the ETFs. Favoring the low breakout in the Spider, low breakout in the Diamonds, and neutral, if not favoring the low fade in the Qs, and then the Russell neutral. So because we had weak market internals, because that data that showed the odds of gap fill were a little bit lower than normal, that's why I didn't fade it. I was willing to take the low breakout. Plus, I thought if we broke the lows of the past 2 days, these two red lines would likely continue further south. But I used the caveat, I used a lot of discretionary range trades, that I would only enter after we traded more than 2 points below the low on a bounce up to the underside. I wanted confirmation. I didn't want to get low ticked and buffaloed. So I did that, got filled short, thought it was going to be stopped out for -4. Instead, it rolled over on the news and filled me for a nice win. I also had set up the high breakout in case you missed it super quickly. High breakout was neutral. Let's go in reverse order. Neutral in the Russell. Favored the Qs on the high breakout. Favored the Diamonds on the high breakout. Neutral in the Spider. Whoops. First hour guys futures. A little bit neutral there in the ES. YM favored. NASDAQ favored. And Russell was neutral. So I traded the ES because I'm only trading when I believe there's a directional bias. But here's the key thing. We talked about it in this trading room. If the market recovers from this weakness to test the highs only a few points from gap fill, it's almost guaranteed to go hit gap fill and then some. So I was very confident that trade, set it up straight up and got filled. Again, I wasn't even watching the news or the markets. Got filled after my, I was a little bit surprised actually because I did hear the noise. My fill order, the low breakout worked. It was reversal, and I got filled alongside for winner there too. So sort of a rare daily double in opposing directions. And now I may get stopped on this discretionary trade, which I guess in itself may be a message. My 2 probability trades worked, and my second discretionary trade may not work, but it goes to 44.50. Anyhow, it's been a good day no matter what. Avoided a losing gap trade because I would have been stopped and caught 2 range breakouts. And we'll see what tomorrow brings us. So there you go. That is the wrap for Wednesday, August 21st. Have a good one.